Hello there, Maverick Currency traders. This is Rob Reinhold. I will be flying solo this week with Ankit on vacation. But look at that. It is May. Summer is here. Well, sorry, spring is here. Summer's not here yet. But let's jump into trading. In this session, we're going to be going through the news of the week. We're going to look through all the currencies. As always, we score everything from a +3 to a -3. We pair up the strongest against the weakest. That tells us where to hunt.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
Right, last week we got a breakout on the market, so we'll take a look at equities, but they've been pushing up against this 5,500 for a few days. We broke above it. It looked like we were going to fall back down, but Friday we held it. So we're above the 50-day moving average for the first time since February, almost 3 months. This is the first time that you can even start to talk about being not bearish. It's a little too early to call it bullish, but definitely not bearish any longer. And it really is because of tariffs and optimism. We're right in the middle of first quarter earnings, and companies are coming out with good earnings. Who cares about first quarter? But what are they saying about second and third quarter? They aren't really bringing their numbers down that much. Remember, Wall Street was anticipating big revisions downward, and it just didn't happen. Also, we got news on Wednesday that China is willing to negotiate to sit down and get rid of those tariffs. So we have the rest of the world on a 90-day pause, and now we have China potentially coming to the table. It's definitely looking more like the end of the tariff controversy and uneasiness, and more towards resolutions. Remember, I said months ago, it's more damaging to have no idea what the tariffs are going to be than to know what they're going to be 20%. Businesses, if they know it's going to be 20%, guess what? They can make changes. They can make plans. They can invest in the future. But right here, right now, when they don't know what's going to happen, it's very, very tough. And I got to tell you what, the cryptos made a great turn over the last 2 to 3 weeks. And I've been talking about being long cryptos again for the first time in months as well. Let's go quickly through the news of last week. For all you Canadians, you knew you had your election. You know the results. The Liberal Party has won. And guess what? The market didn't care. The stock market didn't care. The Canadian currency didn't care. Everyone just went on with business. So look, I know you may care. I know it might be good or bad news to you, but the market sure didn't care. Let's take a look on Tuesday. Tuesday, we've got this report out of Australia. Higher than expected inflation across the board. Aussie was the best currency for the week, and I think we've got some more upside to Aussie as well. Next up, I want to talk about GDP. We got GDP out of Canada and also GDP out of the US, both of them with negative numbers. So Canada has shrunk, America has shrunk. This is not a surprise. We know the economies have slowed quite a bit. The only question was, were they going to be positive or negative? Take a look at the forecasts. The forecasts were for like flat or barely growth, so we got a little bit below that. Not a big deal. This doesn't mean anything until we get 2 negative reports in a row, and that still doesn't necessarily mean a recession, but that is one of the things that economists look for is 2 negative quarters of GDP. After that, we got the inflation stuff. And you can see the core PCE price index is now at 0. So there's no inflation here. This is exactly what the Fed wants. This is going to give the Fed an ability to cut rates once tariffs are figured out. The Fed will cut rates once this uncertainty is over. And then we got the Bank of Japan. They came out and they've said pretty much what every central bank has said is that, look, right here, right now, there's so much uncertainty. They're not doing anything. They said just the same. The yen was actually quite weak last week. I think the yen looks like a good short. And then lastly, on Friday, I want to talk about something first on Thursday. Unemployment claims. I've been talking about these really for the last couple of months. and saying how we haven't seen an uptick in unemployment claims. Even though we hear about all these job cuts and people being laid off in government jobs, we haven't seen it in these numbers. And we got a little bit of a tick up on Thursday, but then we were followed up by a pretty good employment report, payrolls report on Friday. 177,000 jobs. Last month was revised down from 230 down to 185. So look, we've had 2 months now of 175,000 jobs on average. We need 100,000 jobs to keep up with population growth. Guess what? These are decent numbers. Anyone who thought that this economy was falling off a cliff, this economy's been very resilient, and that's why we've seen the equity markets rebound. So we had a positive week. We had the S&P up 3%, the VT up almost 3%, crypto another week in the positive, up 5%. But take a look at gold and oil. I've been talking about gold. Gold made this really huge run, and I talked about all the reasons it was going up. All those reasons have turned around on their head. I think gold is a decent looking short at the moment here. Let's take a look at the S&P and the performance numbers for the week. Here's what I'm talking about. We had this downtrend, very clear downtrend, and then we broke it and we held it, and then we extended it. At this point, I cannot call this a bull market yet, or a bullish market yet. Just like back here, I said once we broke through, I need to see a rebound and a failure. I said that is the key to calling a downtrend. And sure enough, we had big move lower. Same thing here. We've got uptrending price action. I need to see a pullback that holds and then a new high. If that happens, I will get on board with a new bull market and get net long. But until that happens, I'm at really a neutral here on the equity markets. Currency markets, we talked about Aussie being the best performer. We'll take a look at that chart. That looks like it is turning from a downtrend to an uptrend. And then we've got all of our European currencies that were the strongest, especially Euro and Swiss franc. They've been the strongest in this move down. They're no longer pluses. They're actually at zeros and negative ones. So we're seeing the tide turn. The things that were the weakest over the last 3 months, they're back to neutral. The things that were the strongest, they're back to neutral. We're definitely seeing a change, but except for yen. Yen has been weak through the whole thing. This is my favorite trade for the week, is going to be short yen. Other than crypto, I do like crypto. I like crypto long here. I think it's a good trade. We'll look at the setups for sure when we go through everything. So let's go ahead and break down all the charts. 10-year, right in the middle. I'm not going to spend any time on this. It's right in the middle. We've talked about as long as it stays in the middle, it's very bullish for equities and pretty neutral for the US dollar. Crypto, I did a little bit longer dated chart just so I can see the major turn that this has made. We've been in a downtrend for 5 months, 4 months. And we broke that 50-day moving average, and now we have a 20-50 moving average cross. Take a look at this nice high base breakout. Look, technically speaking, everything looks good here in the world of crypto. Let's take a look at this week, what we have coming up. On Monday, we've got Swiss CPI. This has been a very strong currency. It was at a +3, and now it's back down to a 0. If this number comes out weaker than expected, I think the Swiss franc is going to join the yen in my I would really like to short you camp. Tuesday, employment out of New Zealand. So if you're trading the Kiwi, make sure you are aware of that. We have 2 central banks this week. We have the FOMC on Wednesday. They're expected to stay at 4.5% and basically say until the tariffs are done, we can't make any moves whatsoever. That's really what they're going to say. I imagine the Bank of England probably says the same thing, but they are actually expected to cut rates by 0.25%, but don't expect them to have any aggressive language whatsoever. And on Friday, we have Canadian employment. If you're trading the CAD, you definitely want to be aware of that one. So overall, my call on the equity market is that we are sideways to leaning slightly bullish. With that being said, this market still has volatility. At any point, we can have a 4% down week. In previous markets, when everything was more normal, that we don't have tweets coming out that have major implications, a 4% down week was very, very rare. It was just rare. The volatility was lower. We didn't have as much volatility and much news happening. In this environment, we can have 4 or 5% down weeks in equities. And we can have 4 or 5% up weeks, as we saw this week in equities. So just realize that even though we're back off the bottom, we're still dealing with a lot of volatility. I personally love volatility. I wish volatility would stay elevated forever. But some traders, they don't like that volatility. So if you don't like the volatility, you don't like the big moves that can happen out of nowhere, then again, you just need to be cautious and maybe take some half positions and leg into some positions as well. And just understand this isn't your favorite market environment. Let's go ahead and score all the currencies from +3 to -3. Let's find out where the strength and weakness is. I'm going to look at cryptos first. I'm going to come to Bitcoin. And this is just a textbook trend reversal. So again, textbook. I drew that downtrend line. We broke above the 50. We based here. We consolidated. We shot higher. We based again. It looks like we're breaking out here. Everything looks good here. Now look, that doesn't mean it's going to be guaranteed to be a winner. That's not how trading works. But this is a high percentage trade. Meaning if you were to take this trade 100 times, you're going to be happier more than you're sad. But on this next one trade, it doesn't mean anything. We're just going to play the odds in the long term. So for me, Bitcoin is the #1 crypto to buy. Taking a look at Bitcoin Cash, it also looks pretty good. What I don't like about Bitcoin Cash, I hate these big candles and the big wicks. These really play havoc on trailing stops. I use a lot of trailing stops, and they just play havoc with it. So when I see these wicks, I like to see better candles. I like to see candles that open at the low, close at the high without any big whipsaw action. It ultimately looks really good, really strong. I don't see any reason why you wouldn't want to play it, but just Bitcoin looks a little smoother. Ethereum, I kind of stuck my neck out about a week ago and said, I think if you look at this, Ethereum has underperformed and we could see a catch-up performance in trade. Guess what? It hasn't happened. I was wrong on that one. If you were looking at Ethereum instead of Bitcoin, Bitcoin has done much, much better over the last 2 weeks. So I'm going to have to retract my statement. It probably is going to happen at some point where Ethereum will have a catch-up move where, Bitcoin goes up 3 or 4%, Ethereum goes up 12% in a week. It's likely to happen, but it's a better trade just to stick with the strongest. Litecoin, it looks okay. I don't hate it, but why would you buy it when you have such a great looking chart on Bitcoin? So Bitcoin is a clear winner in the world of cryptos. If you're looking to be long cryptos, look at Bitcoin and just kind of watch the rest. Let's take a look at Forex here. Dollar had a big drop, big drop. This is a really wimpy bounce. So I really like this. I really like dollar short, but not right here and not right now. Big moves tend to consolidate for longer. So that was a huge move we had in the beginning of April. I'm guessing we consolidate for another couple weeks at least, maybe a week or two. I like it short. It's not short right now. I mean, take a look at the price action everywhere. It's drifting higher. So until we get that reversal, I'm not interested in dollar. But when we do get that reversal, I'm absolutely interested in dollar short. Here we have yen short. For the yen, we now finally have a signal on the daily chart that we can be short. We're now below the 20-day moving average, below the 50, and the slope of these is about to turn. We might get across. Everything looks good here. If you take a look at velocity score, nice classic bear rally that gives us a nice bearish engulfing failure candle here. I like yen right out of the gate at the first of next week. Swiss franc is one I've been waiting for to do what the yen did. Look at this price action. Ooh, it's being stubborn. It's being stubborn. Swiss franc was the strongest currency when the market was tanking. So when the market recovers, we should see it give that back. It is not giving it back. It is stubborn, stubborn, stubborn. I've used to try to short stubborn things, and guess what? I found out that it was more stubborn than I was, and I bailed on it because it didn't go anywhere. I'm not interested at all on shorting Swiss franc at this point. Let it get a little bit weaker. I'll look at it. Euro, boy, I really want to short Euro. I like the Euro again. The Euro was one of the strongest currencies when we were running down. Now that the market has bottomed out and had a big move, you can see that we're barely off of our high. Barely off of our high here on Euro. We should see bigger moves to the downside on Euro. It's being stubborn. It's being stubborn. So as much as I would love to short Euro, technically I can't until it goes below the 50-day moving average. That's my rule. And let me tell you, since I implemented that rule and made sure I followed that rule, remember, you have to make sure to follow the rules you implement. My trading has gotten better because I no longer am trading opinions. I'm waiting for the price action to actually show me. So below 50-day moving average, on a daily chart, I can go short. If it's not there, I can't do it. And it's kept me safe over a lot of years. Here we have the pound, and it is literally right between the two. It's right between the two. I'm not going to try to figure it out. I'm not smart enough. I've got other things that I can play. Pound, you're just not interesting to me. CAD, you're the same way. We're just right there on the moving averages. There's other things to play. There's so much to take a look at. CAD, you're just going to go on the shelf. Here we have Aussie. That big move lower, a rebound. And again, a lot of times you get the rebound and then a fall to a new low. And you can see this was very stubborn here. Stubborn, stubborn, stubborn. And it weathered this whole time in here. The equity markets were weak. And it was stubborn. And it held and it held and it held. And finally, now that we're seeing some bullishness, we're seeing some moves in Aussie. Look, it's just back to basically a neutral here. I got it as a +1. It is almost above the 50-day moving average, which tells me I can now play it on the long side. I do like Aussie. It's just not ready to go yet, which means I'm going to have to play Kiwi. We just got a nice bull pullback off of a nice run from the bottom, and we've just found this bottom. Okay, the bottom isn't super strong. We're not getting a super strong bounce, but we know how these things go. Sometimes they take a little bit of time to get going. I like this one. It's +2 on the daily. It's +2 on the 4-hour. I think this is going to be where I focus. In cryptos, I'm looking at Bitcoin Cash, and in currencies, I'm looking at Kiwi Yen. Now, if I don't want Kiwi Yen, I could look at like Kiwi Euro, but remember that Euro has not broken down on the daily chart. So I don't have a lot of choices here. I'm pretty much stuck to Kiwi Yen at the first part of the week. So let's go ahead and take a look at some of those on charts, and we'll wrap this up. We will start with Bitcoin here. On the daily chart, it just looks fantastic. It just looks fantastic. On technical basis here, they write these things into textbook to show you how a trend change develops and what it looks like. It says everything you want to see. It does not mean it's a guaranteed trade. It just has everything you want to see in a technical setup. We have been basing for about 2 weeks. We're breaking out. The candles on the breakout are good candles, open at the low, closing near the highs. It's telling me that this is where you want to be. If I come in here to a 4-hour chart, now I'm seeing better setups here again. We got a run, a breakout of this base, and then we base for a little bit here, and it looks like we're breaking out of this base. I think this one probably makes a run up to 100,000. That's going to be my target on this one. I think it's ready to go here. Ready to go here on this one. If you're not looking to play cryptos, then really I'm only going to be looking at one at the beginning of next week, and that is Aussie Yen. Let's take a look at it on a daily chart first. This one has been in a long-term downtrend. We've got this line to contend with. We have seen more bullish price action. We've traded up against these, hit this resistance here, back down, broke through it. We're hitting up against this next. We could have some resistance in here. It would not surprise me at all to get some resistance in this 92.30 to 93 area. I think you want to be a buyer anywhere here. I like this anywhere here. As long as you have a loose enough stop, we should break out of that trend line. And the next move to me is likely going to be up to 95.30. 95.30 here on the target of this one. You've got a lot of pips there. That's like 150 pips. That's more than that. That's like 200 pips. That is a nice 2% move that I think you can capture. So I am liking Aussie yen, basing here on a 4-hour chart. I expect it, while we're hitting this resistance point, to take a little time to get through it. I like this one quite a bit. So there's 2 trades I really like, and the rest I don't like at all. If they don't develop, I'm just going to have to wait for the markets to move a little bit more later in the week, and then I can take a look at some other setups. We are seeing major trends change. Things that were in uptrends for months and months have now gone to zeros. Things that were in downtrends for months and months have now gone to zeros or even plus ones. When that happens, we have to understand that these are major trend changes. You get about 1 or 2 a year, and sometimes they're clean, meaning they just change. And then sometimes they're messy, where they take a little bit of time in order to just flip from bullish to bearish. I actually think, this is my personal opinion, this one's going to be messy, because this wasn't just about, hey, we had a big fall in the stock market and now we rebounded. We did it because of tariffs, and those tariffs are not resolved yet. Until they get resolved, I think this market is going to have a tough time flipping back to a bull market. I just don't think it's going to be there. I think this is going to be messy. I think we stay closer to the 50-day moving average than further away from it, which means I think this equity market is going to be sideways to slightly bullish until the tariffs are resolved. Everyone have a good weekend. Happy trading. Let's go make some pips next week. Goodbye.